What's going on, cheers? Welcome back to another video. Today we're going to be talking about quickly going over some of the most important points in this Bloomberg article, which is gaining some traction on social media among the stock market community, especially some of these stocks that are heavily shorted, like the most popular ones being AMC and GameStop. We're going to be going over the most important points that caught my attention and some 4 questions that definitely need to be asked, and hopefully you guys have your answers and your opinions. If you do, I'd appreciate if you comment them down below. But hedge funds are being examined by the Department of Justice. And that brings question number 1. Where is the SEC in this? Why isn't it the SEC that is conducting these investigations? Why the Department of Justice? Now we scroll down on here. Authorities are prying into financial relationships between hedge funds and researchers and hunting for signs that money managers sought to engineer startling stock drops or engage in other abuses, such as insider trading, which is something that we've been talking about for the last couple of months. How many of these hedge funds are paying these researchers, like Seeking Alpha, all these other websites that are paid, and dumping false news and narratives onto these stocks, which allow the price to come down and for them to profit. And speaking of stocks, there's at least several dozen of stocks. I know Luckin Coffee, which is AKA the Starbucks of China, did report false numbers, accounting fluff on their balance sheets and their income statements. There was a lot of false numbers on there, and which caused the drop. I don't know how much of that was coordinated beforehand or who knew that the numbers were fake, who profit off of that. Hopefully that brings some light. And of course, we want to know about GameStop and AMC. Speaking of GameStop, Mr. Andrew Left, who was from Citron, who was shorting the hell out of GameStop when it went to like 50, 20, he put out a tweet. You guys remember that? He put out a tweet saying GameStop's going to go from 50 to back to 10, and it ended up going to $400. So this guy is Mr. Andrew Left from Citron. He's probably also going to get investigated, but I remember him saying that he was done short selling. He wasn't short selling anymore, and he was focusing on producing long-term plays on his thesis. The next one here, the next point is still successfully bringing changes against short sellers could be challenging, given that betting against companies and publishing research believed to be accurate is lawful and even beneficial for markets. So that's just a question of not legality, but is it ethical? Should you be shorting stock? Should you be borrowing shares you don't own, right? I can't go out there and sell a car I don't own. I can't go out there and sell a house I don't own, but I could go out there and sell stock I don't own. Next section is called funding research. Hedge funds are known to strike a wide variety of deals with researchers, sometimes paying handsome subscription fees for fresh insight into possible corporate trouble. This is exactly what we just mentioned. How much of this information is true? Take a look at this. Dallas Space, this capitalist fund, agreed to pay a short-selling researcher a monthly retainer of $9,500 in 2018. $9,500 might seem like a lot, but when you're a short seller taking on a massive short plays, you're raking in more than $9,500, and you're fooling these subscribers. And the fact that it makes people panic and the stock drop, it makes it seem like you know what you're talking about. And especially if the information is false, the numbers are false. And look at this. We talked about this earlier this morning on the live stream. Seeking Alpha. Every article I see on AMC and GameStop on Seeking Alpha is negative. I don't remember the last time I saw a positive article about GameStop or AMC on Seeking Alpha. That is very suspicious. And to read that they published it on Seeking Alpha, it set off a 39% drop in farmland share price. That's very, very interesting. And there's a lot of collusion about the people who are on certain boards of these companies, of these firms, and where they went to school, and how that colludes with the CEOs of these funds that also were at the same school. So it's very interesting. The next one is here. This is why I do not trade gold. It recently brought several cases against global banks and traders for illegally spoofing of precious metals and treasury futures. As part of that probe, JP Morgan paid more than $900 million in penalties after its traders placed and canceled orders for commodities to benefit positions held by the bank and other private hedge fund clients. Again, these penalties, are they going to be punished? Are changes going to be coming to the markets, or are they going to get a small fine? $900 million, it might seem like a lot, but for JP Morgan Chase, that really isn't a lot, especially once again, if they're making billions and billions of dollars by illegal practices. Is it going to be a slap on the wrist? Are they going to keep on doing it? Are we going to see some legal changes, some real changes? Is this just for show? Is this just to lie to us and keep us on our toes? That's it for the guidance here on this article. Some of the most important points that I found out. But again, where is the SEC on this? And most importantly, the time. How long is this probe going to take? A year? 5 months? 6 months? 2 years? I know also GameStop is working with the SEC and forwarding some docs, but those are the questions that I had. Those are the things that I kind of focused on this article. This article is probably going to spread over the weekend. I highly suggest you guys read it. As for AMC, I picked up more shares. I have more shares. I picked it up here at 27. If we do come down under 25, I hate to say it, but there might be a chance we see 20s. I'll probably cut the L if we do crack 25, but I'm hoping for a nice little rebound back to the 30s going on into next week. The CPI came out, you guys know, 6.8% year over year. It's still hot, not as hot as these forecasts were on Wall Street. I think we're expecting above 7, which is why the markets ran pre-market, but I think we're seeing a pullback in the overall market. Little heat map check for you guys. There you go. Very mixed market, but that's pretty much it for this video. If you guys found this video helpful, make sure you slap a like, drop a comment down below with your thoughts, your opinion, and I will see you guys next week for another live stream. Thank you.